When you're talking about all of the different flations, inflation, deflation, stagflation, et cetera, what I think people really need to understand is that they're just different sides of the same coin. Because when we go into deflation and really think about deflation, if you have an amount of money and prices go down, that doesn't hurt you. That helps you because you can buy more goods with the
Right.
same amount of money. On the other side of that, the only way to fight deflation is with inflation. What strengthening the dollar is, because really all of this wordsmithing is about confusing people so they don't realize what's really happening. History has a tendency to repeat. And one of the things that repeats is that everybody thinks that this time is different, when in reality, it really isn't different. Yes, we have more advanced technology, but we're in essence doing the same thing. So let's just kind of go back to how you value any currency, right?
Okay.
Because that's really when they say a strong dollar or a weak dollar, and that's what you hear, what they're really referring to is that currency, that fiat currency, government-based currency, against another government-based currency. And so, yeah, you'll see them go up and down, but regardless of the currency, because that only impacts you and me if we're traveling overseas, and how many people are doing that these days, right?
Right.
What really is the way to value a currency strongly, in my opinion, for the masses, period, end of for anybody, period, end of discussion, is how much that currency will buy. And this morning I was at the Federal Reserve Education Department, the FRED, FRED, anybody can go in there, and in the search bar, put purchasing power. And you'll see the purchasing power of the consumer dollar, which really officially, first of all, the purchasing power has been dropping faster than I've ever seen in my entire career. And I've been in the industry since 1986 and in banking since way before that, but as a stockbroker, et cetera. And I started studying currencies and currency life cycles in 1987. So what really matters to all of us is how much you can buy with that dollar.
Right.
So all of that is camouflage for what's really happening. The industrialists were playing in the stock market. The stock market was going up, but the general population felt wealthier by the 20s, and then they started to participate in the stock market after, in 1927, the Federal Reserve was granted a unlimited charter. Typically up to this point, it was a 15 to 20 year charter that the central banks had. But so in 1927, the Fed had an unlimited charter, which is why it's still in power today.
Okay.
And the wealthy industrialists in 1928 started taking their profits and getting out of the markets, which was just as the general public really started to go into those markets. Once there was enough money out and enough wealthy money out, I should say, and enough inexperienced, naive money in, then all of a sudden it became too expensive to carry. Lots of credit was given. So lots of debt was given, lots of margin, and then boom, they cut that off.
Mm-hmm.
And you had the 1929 crash. The gold, if you as a citizen own gold and you don't like the way the government is running the country, you just go into any bank and convert your dollars into gold when we were on the gold standard, right? That pulled the gold out of the system and created more restrictions around what the government could do.
All right.
Really like that? No.
No, not at all.
And if they tax you on a gold standard, you know about it. And you might not agree to it. So this is why we really had to go to a fiat system, Plus, for corporations, they wanted to pay as little as possible. They wanted to pay you less. But if you were used to getting $10 an hour, you're not going to settle for $5 an hour. However, in all of those cases between the government and their desire to tax and spend, and the corporations and their desire to pay less and less, so we could create this income and wealth inequality,
Yeah.
right? They took us on to this fiat standard. Could they have done that all the way overnight? No, because the population would have rebelled.
100%.
Right. So they had to do it in a very sneaky way. And over time, where we went from 100% backing to 40% backing to no backing, right? That's what happened over time. Additionally, right now, we know all of those assets are overvalued, whether they're stocks or certainly bonds and real estate, right? But that won't stay that way forever. It will get, just like it did in 29, it will get too expensive to maintain that. Or, and this is what I think is actually going to be the death knell, confidence in these powers that be that are manipulating everything and trading for their benefit, not yours, and using your tax dollars while getting corporate lobbyists into the system that pay billions of dollars to have what they want become law and regulation or deregulation, as it may be, right? So we're paying for all of this, but we're also the ones that take it in the shorts on the other side of it. This protects you from that, because I don't know of anything else that is truly decentralized and truly private and doesn't require any energy or anybody else. You hold it, you own it. It's had value for thousands and thousands and thousands of years. You know, I would also want to say to you, pointing out what's been happening to prices, you know, they're blaming it on the supply chain, and that certainly has something to do with it. But it's really about the money printing. And even though I do not have technical confirmation yet, so I want to be really, really clear about that.
Okay.
My head, my heart, and my gut is telling me that we have already entered the hyperinflationary phase. Because honestly, well, we are in a melt up in fiat money asset prices, right?
Right.
But you know, when I look at what's happening, they want you to stay in the system. They want you and your wealth to be easily taken away. And then who are you going to call?